Hey everybody, I've just been making videos lately for my special Night Rider investment group, but this one I'm going to post on the Extant social channel as well because I really think it's that important. I'm in San Pedro, Belize right now, and just listening to some of the greatest thought leaders of our day right now when it comes to macroeconomics and investment, or at least in my world. That'd be like Danielle DiMartino Booth. I've spoken with her personally and listened to her today. George Gammon, Ken McElroy, who owns over $1 billion with a B dollars in real estate and management, and some other just fantastic individuals, Dr. Chris Martenson and Brad Sumrock, a guy that owns over, I don't know, 5,000 doors in the apartment world, and so many more. My real message on this video, real quick, unedited and unfiltered here, is just simply what I heard today regarding the economy. And it's really not a surprise. In fact, before I came here to Belize and to this event, I had put a special message out to my investor group. And I just want to reiterate what I've heard here and the data that I've seen, that it's not in the media yet, but as of this recording on June 14th, 2022, we are in recession. We are absolutely in an economic recession. And tomorrow, the Fed is going to announce another rate hike, 3/4 of a point in interest rate hike. You've already seen on Monday that was kind of leaked out, and the stock market has started to, we'll just call it, significantly correct. It's all in bear territory. Any of you crypto folks know that the crypto markets have basically crashed. Well, the next leg in this journey is real estate. It's also coming. If you think the stock market is bouncing back anytime soon, that's not true. It's probably going down further. If you think crypto is going to make a big rally, that's not happening in the short term, although I do like certain things in the long term there. And real estate is the next to take it on the chin here. Some of the major metros have already seen this. Some of the builders are slowing down, and certainly listings have skyrocketed. One of the most popular markets, say Dallas, Fort Worth, Texas, you've seen a huge increase, 29% to be exact, in home listings as sellers kind of rush to the market to try to pick up the tail end of what's been going on in the housing market. Even where I'm at in Spokane, Washington, you've seen inventory climb up significantly since then as well. Now, here locally, there's still a lot of demand for buyers. I recently sold a house right before I came, and we had multiple offers and a great situation, and hopefully that closes just fine. It's a great house, so I'm sure it will. But I want to just let you guys know that this is coming, and it's not a surprise, and there's no crystal ball or anything. It's just the fundamentals. When you increase interest rates so significantly, an environment that's been pumped up or inflated, if you will, by ultra low interest rates and an excess supply of money, or what they'll call the M2, which is the money supply. It's one of the terms that they use for that. It's being deflated. So there's something called the yield curve. And when the 10-year yield curve and the 2-year yield curve become inverted, they switch, that is a sign of recession. They also went over some statistics that have to do with oil and some other things, but that's really the big one. Is pretty much every single time you get the inverted yield curve, you've got a recession on the way, and the data we saw is already there. In fact, Danielle DiMartino Booth said when they look back at all the lag data, they're probably going to say the recession started as early as January 2022, if that doesn't tell you something. So whatever that means to you, right? To some of you, if you're highly leveraged, if you are looking to refinance, you flippers, I would definitely be careful at a minimum, because the cost to buy your property has gone up significantly. When that happens, the price typically is behind that. Those of you repositioning apartment buildings where you have like a short-term or floating rate, and then you stabilize it and you look to refinance, that play is really not going to work very well, because if you based your resale price on, say, 4% interest rates or 4.5% interest rates, they're up near 5.5 and rising right now. So that's a really significant difference on the yield that a buyer would pay or their net cash flow that they would pay after they service the debt. So the good news about recessionary times is they need to happen. There's certain fundamentals that weren't fundamentals. There was so much in the stock market we know that didn't make sense. And to be honest with you, really in the real estate market as well. Record pricing and all of those things. So it's a pretty normal cycle as far as that goes. I just want to let all my viewers here know that that is here right now. So whatever that means to you, what it means to me is I'm excited to get back into buying mode. Now, I don't think this is gonna, be July 1st, right when I'm back and there's gonna be all these opportunities hand over fist. But certainly within the next 12, 18, 24 months, I think there's going to be some fantastic buys. And depending on how deep the recession goes, or how many of those folks end up defaulting because they can't refi or sell at the price they needed to, I think even bank-owned properties will be something that comes into play again. So I'll leave you guys with that note for now. Stay tuned with my Night Rider group, as well as my other YouTube social channel. I'll continue to bring this data to you. We're really getting back on the horse. It's now a time where things are going to be changing rapidly. We want to be able to bring you the information. I'm well connected with some of these economists and some of these investors in the US, and everything that I glean from them, I will be passing along to you guys. So just know that things are on the downswing, and the big reason is right over my shoulder here, interest rates. There's obviously other factors that have kind of inflated the bubble, if you will, but really the catalyst, the straw breaking the camel's back, if you will, is these interest rates. It's just not a sustainable thing. So when you take them to the stock market and things like tech companies and stock trading, there's things called margin calls, and there's just a domino effect. If you don't know what a margin call is, you can go ahead and take a look at that, look it up. I'm not going to get into it in this video, but that basically means that people are going to have to sell assets. The Fed is doing this to cool down inflation. That's what we know. They need asset prices to come down because the middle and lower class are just getting absolutely choked out. The gap between the haves and the have-nots, meaning that have assets and those that don't, was getting just too far apart, right? So this is their effort by design to make this happen. I still believe in great fundamental long-term investments and all those things, but put your mouth guard in and lace your boots up, because we're going to have a bit of a rocky ride over the next couple of years here as we finish out 22, 23, and then likely into 24. So, all right, stay tuned. I'll continue to bring you guys great information. Until then, to freedom through cash flow.